Hi, I'm Phil Grandy of philsgang.com. Welcome to my YouTube channel for 10/20/2022. Well, the market gets more interesting as the bond market gets crushed. If you're a bond person and you bought bonds for safety, you're getting killed. And again, I'll tell you why. If you look at the bond market and if you look at the trend, look at the severe trend going down, okay? Unbelievable. Now, that means you're losing your everything. If you're in bonds, you're getting killed. Now, what that does, it moves the 10-year Treasury yield up. And the reason it moves the 10-year Treasury yield up. And what that does is puts downward pressure on the stock market. Okay? So, and the yields are a killer. The stock market doesn't like high yields. If you remember, from 2008 all the way up to 2022, we kept interest rates at zero so that we could have a fake rally. Okay, but that all stopped in November. There's no more QE. Which brings me to this. What's the market going to do? Well, with high yields like this, okay, one, it's going to kill your leadership stock, which is from 2008 for 13 years. Remember, the leader was big tech. Well, the only reason why big tech worked is because they kept interest rates at zero. And then when the market started to fall apart in 2018, that was the beginning of the crash cycle. And this was the first crash back here, 2018, the last the quarter 2018. Then we had another crash here, 2020, and then we got this crash here that we're in now. And the only difference between these crashes and going all the way back to 2008 to 2018, we had interest rates at near zero because they kept printing money and the Fed to keep buying treasuries. Now, the reason we had this big rally after about I think it was about 11 weeks. After a downtrend of 11 weeks, think about it. 2018, the market fell 20% in 11 weeks and then rallied 44%. We had a big 44% rally, okay? And then we had, again, remember 2020, we had another big crash. The market then crashed again, right? Dropped all the down, and guess what happened then? Well, then after 4 to 5 weeks of a crash, it turned around and it rallied up 123%. Now the market crashed another about 20%, 28%, and where's the rally? Well, you can't get a rally. Why? Because you can't get a bottom in either, because the yields, the Federal Reserve can't save us. See, the Federal Reserve saved us back here in 2018 with a big rally, and they saved us here in 2020. But remember what happened in 2008 when the market crashed. They only had on their balance sheet $800 billion of treasuries, where they go buy treasuries, keep interest rates low. By the time they got up to 2022, they've had $9 trillion. There's no more room. They can't save us. So that's why you saw a big rally in 2008 to 2018, 2018 to 2020, 2020 to 2022, and that's when the tech stocks collapsed. No more QE. No more print $150 billion every month to keep those rates low. That's why you're not seeing, okay, the market rally break out as you did back here. So all they're trying to do right now is they're trying to put in a base to the, remember, we're 3 weeks away from an election. So their goal right now is to make sure that the market doesn't continue to drop until after the election. So they're using this support line right here, and they're using this 2020 drop as a support line. So here's all the support right there. It's like putting in a steel I-beam here to make sure they don't go down. And they're creating all kinds of stories. And one of the stories they came out with the other day was that because the Fed can't save us, because they have no room, their balance sheet's packed, that Yellen is starting to say, Well, maybe what we'll do is we'll print money and go and buy the treasuries from the Fed, okay? And the Treasury Department will buy them, and then what we'll do is spread them out to dealers, treasury dealers. Now, this is an idea, but that's stupid because all you're doing is just like the shell game, you know what I mean, moving around. So the important thing is to remember why the market can't break out. So why did we have these rallies, okay? Well, these rallies occurred, remember, last Monday we had a 1,500-point rally, and it failed, okay? And then we had, the other day we had, a 500-point rally, and then we had a 600-point rally, which closed down at the end of the day at 300. And then yesterday the market was down 100. So all they're doing is trying to every day find a way to rally this market right here. They're trying to rally it. And they have the plunger team comes in, and the plunger team, remember, that's made up the President of the United States, Secretary of Treasury, Fed Chair, and the Chair of the Commodities Future Trading Commission. They all get together and make a decision, where are we going to move the market to? And what we'll do is print money, and we'll go buy futures. And that's how they move the market up. And then they do all kinds of different stories and crap. But remember this. The market went up with the tech, and the market went up in the banks in an environment they don't like. So if you go back to your tech group, back here, if you go back to the big tech group and the bank group, okay, these guys rallied, okay, see this rally here? They're rallying all right, but they're rallying with high yields, okay? They're rallying with high yields, and that's not what they want. And the banks always like high yields, but guess what? Only in a good environment. When the environment is poor, like it is now, the economy is very poor, then they don't like high rates because it just puts their customers in further and further trouble, meaning they're going to be late on their payments. So that's, again, where we are with the stock market. So the market is just caught, okay, and with these high yields. So they're going to keep on, as I said, they're going to do everything they can to keep on trying to rally this market between now and the election, and to do whatever they want to do. They can come up with all kinds of crazy stuff. All right, but as traders, remember, the last thing you ever want to do is buy and hold. Right? Never buy and hold. Buy and hold goes against everything that we've learned about investing, risk management. When you buy and hold, risk management goes out the window. Anybody tells you to buy and hold, these are your stockbrokers and money managers, because they don't want you getting out of the market because they keep making money on you. So please understand right now, this market is going to stay inside its trend. Okay, and there's the bottom. So if you really want to know what's going on in the market, it's going to stay inside its trend here. Okay, and it's going to go up, back down, and the bond market, as long as the bond market's going straight down as it is, that means that the market, okay, is going to continue to be under severe pressure. So the bond market going down like this, it's going to be very hard for the market to break out. Okay, so that's why the market should go lower. Now, we've been making money. My members have been making money. Okay, we bought the spiders, and we did a nice trade on the spiders, and we bought right here SPY. So inside the trend, we made 10%. Okay, inside the S&P downtrend, we made about a 10% return on the spiders. We also made on Schlumberger. We made 11% on Schlumberger. Now remember, we're making that in this severe downtrend market. Okay, see it? So look, come to this site when you want to know what the market's going to do. But if you want to put that information and that knowledge to work, why don't you join my gang? And it's free for 10 days. Learn how to sell short, okay? And what a difference it's going to make. So again, just go to philsgang.com, click on Get Started, take a look at it for 10 days. It doesn't cost you anything. If anything, you'll be learning how to sell short. Okay? All right. So I hope now you understand why the market's going to have a very difficult time going higher. See you on the chart.